Good morning and happy Friday. Jordan Keck, your complicated deal guy with your weekly market update. Remember that today is technically a federal holiday, so no fundings today, but still be available if you have everyone needing to get pre-approved before shopping for homes for the weekend. So feel free to reach out. I will be available and hope you have a fantastic weekend here, staying safe. As far as interest rates, moving up just a little bit from last week, within the same range, so not massive changes, but moving from 6.53 to 6.60. And this again is for the top tier scenario for purchase transactions in the US with a small amount for lender fees. Each scenario is going to be different. This isn't going to be a quote, but really an indication of where rates are going week to week. As far as our weekly mortgage tip, wanting to talk about appraisal contingency deadlines. This is something that I'm not seeing a whole lot of people talking about. There are some agents and some teams that are really on top of this already. Most of the time, I'm finding that it's just kind of there. People aren't really putting a whole lot of thought into it, but something to be aware of, because the standard way has been waiting until the inspection is done, getting the appraisal order from there. So you want to make sure that your appraisal contingency deadlines in your contract give enough time to be able to do that. And also take into account specifically on VA loans, VA does allow up to 15 business days, so 3 weeks, to deliver a report in Oregon. A lot of appraisers are coming back delivering sooner than that, but they don't have to. And so that's something you want to keep in mind, especially on VA loans. Next up, we got the BLS June jobs report that showed 57,000 jobs created, which is about half of estimates. The previous report for May was also revised lower by 43,000 to 129. April was revised lower by 31,000 to 148. In total, there were 74,000 in combined negative revisions to the 2 previous months, adding to the headline miss. The household survey component, which is where the unemployment rate comes from, it showed a 507,000 job loss. So you'd think that the unemployment rate would go up, but because they're no longer counting 720,000 people in the workforce, the unemployment rate actually decreased from 4.3% to 4.2%. Now, this isn't because more people found jobs. This is because people had been looking for jobs long enough, they were no longer counted as job seekers. Next up, we got ADP's June jobs report that showed 98,000 jobs created, a little bit weaker than the 110,000 that was expected. The job growth was seen in all sizes of businesses, with small businesses leading the majority of it, with about half of jobs coming from education and health services. Wages for job stayers increased by 4.4% year over year, unchanged from the previous report, and job switchers saw an increase of 6.6% year over year, up from 6.5% in the May report. Next up, the JOLTS openings report for May showed 7.6 job openings available, which is about 300,000 above estimates. There was a big influence on this from the World Cup, with openings in leisure and hospitality up 95,000 and food service up 62,000. The hiring rate still remained at 3.3%, just off of the lowest level of 2011 of 3.1% when removing COVID. Next, we have Shiller and FHFA home price appreciation for the month of April. It's always a couple months delayed, showing basically no movement on either of the two. The raw numbers for Shiller did see a 0.8% increase for the month, but because of seasonal adjustments on that, it ended up being flat, with home values up about 1% year over year. FHFA, which only measures homes with conforming loan limits and does not count for homes bought with cash, showed home values fell 0.1% for the month after seasonal adjustments and are up nearly 2% year over year. But the raw figure was up 0.7% in April, 1% in March, and 0.9% in February. And lastly here, Apartment List June rental report showed new rents rose 0.4% for the month. While this is still an increase, it's very nominal for this time of year, and similar to seasonal increases in home inventory, we kind of expect this to happen, so nothing out of the ordinary there. Rental prices are still down 1.2% year over year and have been falling on an annual basis for the last 3 years. Vacancy rate has come down slightly from its peak of 7.3%, but we're now at 7.2% nationally and has remained there for a few months and still very high. And the list to lease duration was 30 days, which is the longest rentals have been sitting on the market in the month of June in the last 7 years. As always, hopefully this is helpful. Have a fantastic weekend, stay safe, and happy Independence Day. We'll see you next time.